Corn futures have dropped, wheat futures have rallied, soybean futures are near key resistance. Will this trend continue?
The answer to the first question is that corn futures dropped after rallying after the USDA June acreage report because of improved weather and just reduced demand because of COVID. Wheat rallied because of the French and Russia futures have rallied to almost 11-month highs. This due to lack of farmers selling and also some concern about crops in Russia and Europe. Still, we're up against pretty strong resistance given the fact that export demand has dropped because of COVID. Soybean prices have a demand premium in them because of China buying beans. There's still a big question of how much they'll buy from the U.S. given all of the tension between the two countries. But we do think they need to buy more beans from the United States. But is it enough to rally prices?
U.S. farmers are under financial stress. Why? Will this change their marketing plans?
We have seen farm aid go to farmers. We have seen prices in soybeans rally. But we've seen corn prices remain to the farmer below break even. And so farmers under stress right now and trying to make enough revenue to pay bills. And I think that that will probably continue until we put COVID behind us, improve trade relations with especially China, improve our market share for exports, or down the road maybe have a weather problem somewhere to reduce global supply.
U.S. Midwest weather is a mixture of warm temperatures and scattered rains that are favoring the West Midwest. Is this enough to produce a corn and soybean crop above demand and pressure prices lower?
The U.S. Midwest weather is kind of a mixture of warm temperatures and scattered showers. Over the last 2 weeks, about 60% of the Midwest favoring the North and West has seen enough rain to produce a good crop. Those states include South Dakota, Minnesota, Iowa, Wisconsin, and this past week, Illinois. This week, about 40% of the Midwest is going to see that amount of rain, and 50% of the corn crop is pollinating. Crop ratings have slipped a little bit, but are still above average. And right now, we're still looking at yields and production similar to what the USDA recently said. So we're running out of time for the corn crop to be hurt enough to rally prices, and soybeans are made in August. So there's a lot of doubt as if soybean November prices can rally much over $9, that corn can rally much above current prices, and September Chicago wheat above $5.60. And I think that without a weather problem, without new demand, prices will go lower into the fall than what they are now. Still, people are talking about November beans below $8 and December corn below $3.
What are the fundamentals impacting the silver market?
So it looks like the dominant fundamental that is currently affecting the silver market is all of the stimulus that we are seeing from central banks and governments that is supporting the global economy. And it does look like there is some recovery, or at least hope of some additional recovery as well. So the industrial component portion of the silver market is being positively affected. The silver market now has advanced as of today to its highest level since 2016 with very strong gains in the morning hours. So nothing has really changed in my silver outlook. The trend is still higher, and I would look for more of the same, higher prices likely for silver.
What are the charts saying about the near-term outlook for stock index futures?
Well, the charts are giving us some mixed signals, but I would have to say mixed to bullish on balance. Starting out with the one negative signal on July 13th, we did have the NASDAQ futures putting in a one-day reversal to the downside. However, the S&P and the Dow both trading above major downtrend lines. Keep in mind that the one-day reversal in the NASDAQ is an indication that is really not that formidable as far as a reversal pattern. So the one-day reversal is actually the weakest of all of the reversal patterns. I'm thinking that the other factors on the charts, S&P and Dow, will dominate in all of the indices, including the NASDAQ, will probably work higher near term.
Has the copper's future market topped out?
So the copper market has rallied over $1 since the lows were made in March. We are approaching the $3 level, which has held. Much of this strength linked to the industrial component, of course, of copper being a product in so many products that are being made. So Dr. Copper putting in some very good gains. Some resistance, though. We are now in a consolidation pattern. Ultimately, though, I think that $3 will not hold. The next objective I have to the upside is $3.10. So with this congestion pattern building for a while, ultimately I am expecting a breakout to the upside in the copper.